Good morning and welcome. We are now in our hands is the policy announcement. This is Ankita Saxena, I'm Harsh Saita, and we'll kickstart the day for you. The critical FOMC meet has ended and we do know the outcome, 25 basis points. But what is the effect of that? So Ankita is going to take us through all that's happening in global markets, after which we'll go domestic and we'll also go stock specific to keep you updated on what stocks to look out for. So Ankita, talk to us about how global markets are moving.
Good morning to you, Harsh, and good morning, everyone. And like you mentioned, the big decision is out, and the street was penciling in a 25 basis points rate hike, but it's actually the commentary that really weighed down the markets. You know, the Fed chair saying that they don't intend to pause the rate hikes or cut rates, rather, and the fact that they are determined to bring down the inflation at 2% is something that really weighed down the markets yesterday. And stocks fell in trade after, of course, the Federal Reserve raised their rates by 25 basis points. As it was widely expected, the Dow Jones Industrial Average closed low by 270 points. The S&P 500 dropped 0.7%, and Nasdaq Composite slid 0.4% in trade. The indices notched 3 days of losing streak. Earlier, bullish sentiment was dented somewhat after Fed Chair Jerome Powell ruled out cutting interest rates because he did not expect inflation to come down quickly enough, and Fed was strongly committed to returning the inflation to 2%. So it was mainly his commentary that really weighed down the markets, or rather dampened the market sentiments. Now let's look at the European markets. European markets were bucking the trend. They closed higher. The Pan-European Stock 600 index provisionally ended the day up 0.3%, slightly trimming the earlier gains that came in. DAX was up 0.5%. FTSE and CSE were up 0.2% in trade. So a mixed global handover coming in there, but largely the market sentiments have been dampened by what the Fed chair had to say. Harsh.
Well, absolutely. So two critical points that I would take away from that. One is the fact that the Fed chair doesn't expect, and the Federal Reserve does not expect, inflation to come down to that 2% target quickly. They're going to wait and watch as to how this particular rate hike, as well as over the last year, is going to play out on inflation, and they're not fully confident as to how quickly it will play out on inflation. So that's one thing that's keeping markets in a dampened mood. And the other piece is that they're not going to hike rates, but they're not going to cut rates very quickly on the back of the first statement that they made. And that has also had a bit of a negative sentiment on crude because it affects demand, right? So we have seen crude come off 5% on Wednesday, and we now saw crude fall another 4%. So we've seen Brent crude actually come to below $69, or my apologies, Brent crude come below $73 a barrel, and WTI below $69 a barrel. So we're seeing sharp cuts on both of those, and that's largely on the back of course, as Ankita mentioned, the Federal Reserve as well as the commentary and the action both. And that's where we're currently seeing it. The mood currently has been dampened on the back of those couple of announcements by the Fed.
All right, then sharp cuts coming in for crude, and even the dollar index is sub 102 levels as of now, Harsh. And we'll quickly move on and look at the events that we need to keep an eye out on. We have the US crude oil inventory number that will be coming out. The ECB rate decision is coming out today. US initial jobless claims, a very important data point that will perhaps guide the Fed towards further interest rate hikes, or a pause is of course not on the cards as of now. And the Apple earnings are also likely to come out today. Also back home for the earnings season, Nifty, we have for the Nifty companies, we have HDFC, we have Hero MotoCorp that will be coming out with their earnings. In other companies, we have Blue Star, Dabur, TVS Motor, Tata Power, Aptus Value, Bombay Dyeing, CEAT, IDFC, and United Breweries that will be coming out with their quarter 4 earnings as of today. And in other corporate actions, we of course have the weekly expiry today, and we also have a Blue Star that will be considering a bonus share issue, and Aptus Value will be considering or raising funds as of today. So these are the events that we need to keep an eye out on as of today.
Well, thanks for that, Ankita. Let's quickly move on to global news. Right, so you have the US Federal Reserve which has cut rates by 25 basis points. And we're going to talk about that a little bit more. The US Federal Reserve continues the tightening path to bring back inflation to 2%. Jerome Powell led the Federal Reserve, and he's raised interest rates by 25 basis points. The chairman in his speech signaled a possible pause on the rate hike in June, taking up a data-dependent approach from here on. Meanwhile, he also added that it was still a long way to go in the battle against inflation. He says, if at all, the US is likely to see a mild recession, but conditions are pointing towards avoiding one at the moment. Let's listen in straight from Jerome Powell himself.
In terms of what we're doing, of course, I think banks themselves or many banks are now are attending to liquidity and taking opportunity now, really since the events of early March, to build liquidity. You asked about the separation principle. Like so many things, it's very useful, but ultimately it has its limits. I mean, I think in this particular case, we have found that the monetary policy tools and the financial stability tools are not in conflict. They're working well together. We've used our financial stability tools to support banks through our lending facilities. I would just say, in terms of J.P. Morgan buying First Republic, the FDIC really runs the process of closing and selling a closed bank completely. That is their role. So I really don't have a comment on that process. This is an exception for a failing bank, and I think it's actually a good outcome for the banking system. A broad understanding of monetary policy, credit tightening is a different thing. There's a lot of literature on that, but translating it into rate hikes is uncertain. The case of avoiding a recession is, in my view, more likely than that of having a recession.
Right. So a slower economy rather than a recession is what Jerome Powell is really penciling in. Now, latest on the banking crisis, sources suggest that Pacwest Bancorp is weighing in strategic options, which include a possible sale amid flaring concerns around its financial health. The news flow marring investor sentiment as Street continues to factor in contagion fears from the SVB and First Republic collapses. Reacting to the news flow, Pacwest took a hit of 53% in after-hours trade.
Well, and plane maker Airbus posted a smaller than expected fall in the Q1 earnings. Strong performance largely aided by their helicopter segment. Company chief Guillaume Faury held US engine maker Pratt & Whitney for some of its troubles. The supplier is having to juggle between providing enough engines for new jet production while feeding enough spares to airlines to meet with the larger than expected engine wear out.
An Indian origin, Ajay Banga, to now head the 25-member board of World Bank. With the appointment, he is tasked with revitalizing the organization to confront challenges primarily on the climate change front.
And we'll point the camera to Russia-Ukraine for a bit. Big escalation in the Russia-Ukraine war. Kremlin says it was attacked by 2 drones last night. But President Putin of Russia is safe. Kyiv accused of trying to assassinate the Russian president. But Ukraine denies any such attempt. Russia now says it reserves the right to take retaliatory measures wherever and whenever is deemed necessary. Let's go across to Maruf Raza, consultant and strategic affairs expert on this particular piece.
Yes, Russia says that last night 2 Ukrainian UAVs got very close to the Kremlin and wanted to attack the Kremlin and naturally try and assassinate President Vladimir Putin. Now, Ukraine does not say so. Ukraine denies it. But if Russia is saying it, Russia has also said that they will take action. Now, what kind of action is possible? First of all, there could be similar attacks. There could be attacks on, let's say, the presidential palace in Kyiv. There could be missile attacks on big cities in the Ukraine, whether it's Kharkov, whether it's Kyiv, or wherever. Thirdly, there could be a spoiling attack. We all know that Ukrainian counteroffensive is going to begin very shortly. That could happen, but the Russians could start a spoiling attack very soon. So all these things are possible. So are other options. So we will have to see what the Russians do. But the Russians have put this out, and they are clearly very serious. They are saying that this was an assassination attempt, that the Ukrainians sent UAVs all the way to Moscow, which is a really long distance from where Ukraine is, to try and attack the Kremlin. It's a big moment, and we will have to see what Russia does and what Ukraine does.
See, if Kyiv had the capacity to launch drone attacks on Moscow, it would have done it much earlier, because for the last 1 year they've been harassed like hell by Russian fire and Russian attacks. Quite clearly, it is the supporters and sponsors of Kyiv in the Western world that are giving Kyiv the additional armaments necessary to try and make such an attempt. But there are 2-3 things that stand out. One is drone attacks are unlikely to be very accurate because by their very nature, drones work on a system where if they are used in situations like this, they have to do a certain amount of guesswork. Mr. Putin, being an autocrat and a dictator, is obviously conscious of the fact that his life would have been threatened, not now, but for the last 1 year. Also, the fact that Kremlin is always averse to the possibility of somebody within internally in Russia trying to unsettle Mr. Putin and get him out of the way, because the West has seen Putin as the biggest hindrance to their attempts to get the better of Russia. The second thing is Russia has fantastic air defense systems. China has bought it. India has bought their air defense systems. So it's unlikely a few odd drones can do more than just psychological damage. And the third is that there will be allegations and counter-allegations, but this could set the stage for a further escalation in the conflict, with Russia pointing fingers at the West, and the West obviously taking the deniable rule, because that's what the route most covert operations take. So all that put together, it is a jigsaw right now, and I don't see any major advantages the West would have got out of trying to make an attempt to threaten or assassinate Putin. Putin lives in a very fortified situation. He is conscious of the fact that he is not very popular in his own country and abroad. And Putin has been responsible for a lot of assassination attempts himself all over the West, through poisoning and other things. So he knows the game. And I don't think we can expect anything major to come out of this except the possibility of escalation.
Moving on to Serbia, tragic scenes at a primary school in Serbian capital Belgrade after a 7th class student opened fire inside the school, killing 9 people, including children and a guard in the mass shooting. Now, 6 more children and a teacher were injured and hospitalized. The 14-year-old boy has been identified and taken into custody.
Right, let's slip into a very, very short break. More on the other side, of course. We'll go domestic. We'll start covering all the domestic news, followed by corporate news. Well, what really occupied a large part of our mindshare yesterday was the Gophers crisis, right? And let's get you back on top of that one. A second meeting of lenders is set to take place today. My colleague Ankur joins in with the latest on this one.
Yes, another round of meeting of Gophers lenders is set to take place today, as the meeting which happened on Wednesday, they could not decide on future course of action. There were various options which were discussed in the meeting, including a debt recast option, which, according to sources, was possible before an application was made to NCLT. However, now the lenders need to decide on how they can recover their full amount. That is rupees 6,521 crore. And for that, as NCLT hearing is today, they will be served with notices as respondents, and for that, they need to prepare their reply on what they will present their case in the court. As far as the liquidation and all these options are concerned, that is always the last resort for lenders. So those options are not possible for lenders, at least in the first stage. However, interesting thing is that the lenders are also planning to have a discussion with the promoters of Go First, and it will be interesting to see if there is any conclusion happens in the meeting, which is set to take place later today.
All right, Ankur, thank you so much for joining us. And we'll stay with the Go First news. Oil marketing companies do not have much dues against Go First Airlines. Now, if operations resume, OMCs will supply fuel to Go First on cash and carry basis. My colleague Prakash Priyadarshi has more details on this. Over to you, Prakash.
Yeah, sources are informing that the oil marketing companies will supply fuel to the Go First Airlines on cash and carry basis. However, no supplies are being done at the moment due to a halt in operation. But we are given to understand that cash and carry mode will be adopted whenever supply resumes after May 5. We are also given to understand that oil marketing companies are taking all precautions, all the due procedures are being followed since the company has declared itself bankrupt. So all the procedures are being followed by the oil marketing companies as per the norms. When it comes to outstanding dues of oil marketing companies on Go First Airlines, we are given to understand that IOC, being the largest supplier of fuel to the airlines, has approx rupees 50 crore outstanding dues. But oil marketing companies are very much hopeful that the airlines will honor the commitment as per the agreement. So there are no immediate recovery plan that has been prepared by the oil marketing companies, only due to the fact that they have long-standing business relationship with the airlines. Also, what we are also being learned from our sources that the important fact that needs to be taken into consideration is that Go First has no governance issue. It's a well-managed company. The issue is with it's largely a technical issue, which is with regard to engine supply. So all marketing companies are in wait and watch mode at the moment, and they are hoping the situation gets normal as soon as possible. The issue which is with regard to demand of ATF, sources are informing that they are not seeing much impact of ATF demand due to this particular issue, only due to the fact that there are various possibilities available going forward, and one of them is to carry additional flights or allotment of routes to the other airlines. So various possibilities are there, so they are not seeing much impact on demand due to this particular issue.
Well, thanks for that, Prakash. Let's quickly move on. Go First is hopeful of resumption soon. We spoke with the CEO, Kaushik Khona, and a day after it filed for insolvency yesterday is when we spoke to him. The company says the board evaluated all options before filing for resolution. Listen into what he had to say.
The reason why we have filed application under Section 10 is that Go First has a huge potential to revive and operate again very soon. And that is the reason why, as I said, we have preferred Section 10. Why do we get that confidence? Because we have been operating with the best operating parameters under the operating cost, which is comparable to the industry. And we were only affected by the non-availability of the engines by Pratt & Whitney. Had Pratt & Whitney complied with their obligations under the contract, we would not have faced this problem since last 3 years. Had Pratt & Whitney, even after not complying with the obligation under the contract, had they even complied with the arbitration award, which we were forced to go into, which was rendered on 30th of March, even if they had complied with that order, I think we would have been home and we would have been growing in our operating fleet.
And well, keeping up with the earnings, Titan has posted its Q4 numbers where the margins and the net profit has missed the street estimates. The company's jewelry and watch business clocked in good growth this quarter. My colleague Winnie is here with all the number crunching. Take it away, Winnie.
Absolutely. So in terms of numbers, you see a miss is coming in on the margin front. Revenue was above the expectations. Revenue grew by 33%. While in terms of the EBITDA margins of the company, that have seen a contraction coming in. We were expecting EBITDA margins at 12%. They've come in at just 10.7%, approximately around those levels. On a year-on-year basis, EBITDA margins have remained flat. Profits of the company also have seen a growth coming in. Now, jewelry segment, which accounts to more than 80% of their revenue in terms of the mix, that has seen a growth of 32%. And also, do not forget, there's around 1,000 crore in terms of bullion sales, which is included in the jewelry segment as well. So jewelry segment has seen a growth of around 32 to 33%. Watches segment, eyewear segment have seen a very strong growth as well as the emerging businesses that have also seen a good growth coming in. Now, overall, when you look at it in the jewelry segment, also what you're seeing, the market share of the company is at around 7%. 8% is now digitally influenced in terms of sales for the jewelry business as well. Studded ratio is coming in. The studded jewelry sales are at around 33% of the total sales of the jewelry segment. Other than that, the management is also highlighting in terms of commentary coming in for the demand. March, yes, subdued demand is what they mentioned. April, first half was also subdued demand. But from the second half of April, we have started and seen an improvement in terms of the demand trends is what the company is highlighting. Obviously, in March and April, there was a lot of gold price volatility which impacted the company. So keep an eye out on that. And company is also highlighting that they have continue to remain quite well placed in terms of the months of May and June as well in terms of demand for the jewelry segment as well. Management is also highlighting that jewelry EBIT margin, which is at 13.7% right now. They believe that the jewelry EBIT margin for FY24 could be somewhere in the range of 12.5 to 13% as well. So those are the key highlights that are coming in from the management in terms of Titan's commentary. Also, when you look at brokerages, now JP Morgan is continuing to stay overweight on the stock as well as of now. Other than that, even CLSA said that seems like it was a good performance in Q4 FY23 from the company. They're maintaining a buy on Titan and they've increased the target price to 3,210 rupees per share. Jefferies, they believe that all the good news is actually priced in for Titan, so they are retaining their hold rating for Titan. So that's the update that we're getting in terms of the review as well as the brokerage notes this morning.
All right, then. Thank you so much for joining in, Winnie. And with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we get you all the stock-specific news.
Welcome back. You're watching Market Cafe on ET Now. Let me shift focus to mutual funds. ET Now has learned from sources that the market regulator, SEBI, will soon come up with consultation papers on rationalizing total expense ratio, which is TER. The regulator is also working on a proposal to incentivize fund managers based on the performance of the funds. Ankur Mishra has more details on this one. Ankur.
Yes, market regulator SEBI is working on number of regulations for mutual fund, and among them is Mutual Fund Light, which currently SEBI is deliberating and discussing with the industry. What we have learned is that it will be kind of reducing compliance burden for asset management companies, and to begin with, it will start with passive funds, wherein if a company wants to come up with this kind of fund, there will be very, very less compliance burden. In fact, if sources are to be believed, that will reduce the compliance burden by 90% or so. Apart from that, SEBI had earlier issued notices to discontinue B30 incentives for mutual funds. Now, what we understand is that SEBI is in discussion with the industry for creating a new kind of structure for incentivizing mutual funds in a different way. One of the suggestions which has been given is that it should be for new customers only. Apart from that, there are other suggestions which has come up for mutual fund regulations, and one of them is TER, which has been in works for quite a long time. What we understand is that consultation paper is likely to be issued very soon, and in that there may be an incentive for the fund managers who are performing very well. However, it needs to be seen whether or not SEBI actually disincentivizes those funds which are not performing up to the mark.
And well, it is that time of the show where we get you all the stock specific news and the stocks that you need to keep an eye out on in today's trading session. And for that, we have Lisa in our studio. Lisa, tell us what are the stocks that have caught your eye? What are the stocks that we need to keep on our radar as of today?
Yes, good morning to all. So starting with the corporate announcements, Dabur has made an announcement that its subsidiary Dabur Nepal Private Limited, they have been granted approval by the Investment Board of Nepal to invest around 969 crore, and that will be used to grow the business in Nepal by way of capacity expansion, product diversification and also upgradation of its plant facility, and this will be over the next 4 to 5 years. Moving on, GR Infra Projects, they have been emerged as an L1 bidder and the bid project cost for the same is around 737 crore. SJVN has also obtained 200 megawatt grid connected solar power project, and that is at Kavda Solar Park, and the tentative cost for the development of this project is around 1200 crore. AstraZeneca Pharma has received DCGI nod for a cancer-treating drug, and they will be importing the sale and distribution of trastuzumab deruxtecan. So that is on AstraZeneca Pharma. And also HG Infra, they will be selling its stake in the wholly owned subsidiaries, 4 subsidiaries in all. The board has approved the companies entering into a share purchase agreement with Highway Infrastructure Trust, and the enterprise value for the same is around 1394 crore and the equity value is around 531 crore. But now moving on to some earnings, Petronet LNG, they have reported earnings whether on consolidated basis the revenue was up 4% year on year, but on the other parameters it has been weak. PAT was down 22%, while the EBITDA was down around 19%. Margin also came in lower, 6.8% versus 10.5%. And on Tata Chemicals, Tata Chemical has reported inline set of numbers. If we look at year on year basis, the revenue was up 27%, PAT was up 62%, margin also was higher at 21.9% versus 18.9% last year. So these are the stocks that will be on investors' radar for today.
Right, thanks so much for that, Lisa. Let's quickly shift focus though. We'll stick with you because ABB India has reported a stellar quarter on calendar year 23 set that they've come out with. What's aided ABB India? Lisa, talk to us.
That's right. ABB has reported a robust set of numbers versus the estimates. The revenue came in 4% above the estimates. EBITDA was also 15% above the estimates. Also, the margin was higher at 11.8% versus the 10.7% expected. Revenue growth was seen across all the segments, the robotics, motion, electrification, and also the process automation. Margin improvement was on the back of better price realization, volume growth, as also the better capacity utilization. Well, on year-on-year basis, revenue and EBITDA, that saw double-digit growth, but PAT saw a decline of around 34%, but that was because last year there was an exceptional gain of around 293 crore. So adjusting for that gain, the PAT was higher by around 60%. Well, talking about the order inflow also was strong. It was 3,130 crore. And this was in fact the highest ever ordered in Q1 in the last 5 quarters. So also the order backlog that stands at around 7,170 crore. So well, the key factors to watch out from the commentary will be the export order outlook, the capex, the cash balance is also strong. So what acquisitions they will go for, and also the short cycle order. So this is on ABB and it will be in focus on back of strong numbers.
All right, then thank you so much for those details, Lisa, and we'll move on. Our financiers have reported its Q4 numbers where the NII, PAT are seen to grow on a year-on-year basis. But the resignation of Sushil Kumar Agarwal, the former MD of the company, may weigh on the stock. Vamakshi is here joining in with more details on this. Over to you, Vamakshi.
Well, absolutely. Aavas Financiers reported a good growth as far as their Q4 numbers are concerned. Net interest income was up nearly 23% on a year-on-year basis at 221 crores, while the pre-provisioning operating profit saw an uptick of 22% on a year-on-year basis. PAT, however, was up only 10% on a year-on-year basis at 127 crores. We also saw that the provision cover has increased on a quarter-on-quarter basis from 3.51 crore to around 6.38 crores. The AUM disbursements growth was held this time around. When we look at the disbursements, they stood at 1,500 crores, which is an uptick of almost 25% on a quarter-on-quarter basis. So good momentum over there. AUM also saw an uptick of nearly 24% on a year-on-year basis, standing at 14,100 crores. So AUM growth was driven by higher disbursements and lower run-offs during the quarter. In fact, the company also added 25 branches in the fourth quarter, and with that, the total branch branches stood at 346. The asset quality has also improved to 0.92% from 1.13% quarter on quarter. Now we're also seeing that the top management has changed. Mr. Sushil Kumar Rakalwar has resigned from the position of MD with effect from the May 3rd, 2023. Mr. Sachinder Bhinder has been appointed in his place as the MD for a tenure of 5 years. And important to note that Mr. Bhinder is already the CEO of the company and he has now been elevated as the MD of the company. Now earlier in April, we saw that the latest shareholding disclosures also revealed that Mr. Agarwal's stake had declined from 3.33% to 1.55%, a reduction of 1.8% stake that he had done. And Citi at that point in time believed that the sell down could temporarily weigh on the stock and in fact had closed its positive upside 90-day catalyst watch. This resignation, as we all know, is negative. Mr. Agarwal was instrumental in designing the business framework for Aavas since inception, and the reason behind his resignation would be important to know, as the core team at Aavas was sticky for quite some time. So overall, Aavas financiers in focus on the back office results as well as the resignation that came in from the MD.
Thanks a lot for that, Vamakshi. Let's quickly move on though. Dabur will be reporting its Q4 numbers. Margins are expected to remain under pressure sequentially, while commentary on rural demand will also remain in focus. Let's go across to Vinny to understand what the street is penciling in.
So in terms of Dabur's number, when you look at it, the revenue growth is expected at 6%. This growth will mainly be led by the food business for the company, which is expected to see a good growth. But the health supplements, which was seeing a higher base last year, the same time, Q4 FY24. So that could see a bit of a subdued performance, as well as the hair care business also could see a bit of a subdued performance. So yes, food business will be leading the growth. Health supplements as well as hair care business is expected to report at a subdued growth due to the high base. Moving on to the margins of the company, yes, they are going to be under pressure. 17.2% is what we are expecting the margins at. We're expecting a contraction of around 80 basis points coming in, mainly due to the currency headwinds that the company could be seeing in the international business. Obviously, other than that, increased ad spends is something that could lead to a short-term pressure on the operating margins as well. So keep an eye out on the ad spends numbers as well. How is that shaping up for the company? That's an important factor to watch out for. The company also highlighted it in its Q4 operational update that, they had seen a bit of an improvement in terms of the sequential performances on the rural and urban growth front. But rural growth, the volumes are still a bit subdued and still remain muted, while urban markets have actually turned positive in terms of the volume growth. So let's keep an eye on that factor and commentary on that as well as how is the commentary coming in on the international business. Demand outlook for the juice category is going to be important because obviously summer season is here. How was the sales for that product is something that we'll get to understand in terms of that as well. And do not forget, this is the first quarter after the company has acquired and consolidated in terms of the Badshah Masala business. So that is a factor we're keeping an eye out on as well.
All right, thank you so much for that, Vinny. Moving on, India's leading life insurance company HDFC is set to deliver its Q4 results. Vamakshi is here joining us with all what the street is expecting. Over to you, Vamakshi.
Well, absolutely a decent set of numbers is what we're expecting from HDFC Limited this time around. When we look at the net interest income, that is expected to grow by around 9% on a year-on-year basis to around 5,000 crores, while the net profit is expected to come in at 3,807 crores, an uptick of almost 3% on a year-on-year basis. Provisions, however, are expected to decline on a sequential basis from 370 crores to 360 crores. The AUM is expected to come in at 7,34,900 odd crores, an uptick of 12% on a year-on-year basis is what we're factoring in. So largely what we're expecting is that the AUM growth is expected to be healthy. The individual loan book growth could come in at 3% sequentially, while the non-individual loan book growth could be at around 12% quarter-on-quarter, rather 2% quarter-on-quarter. Asset quality is expected to improve and the NIMs are expected to remain stable or see some bit of marginal improvement. So largely those were our expectations, but what are the factors that you should watch out for? We should be keeping an eye out on the company's expectations on home loan demand. The outlook with respect to margins is another important factor to track, as well as the commentary that came in on the merger, as well as the asset quality. That will be another important factor to track. So largely, we're expecting a decent set of numbers from HDFC Limited.
A decent set expected from HDFC Limited. Thanks for that, Vamakshi, again. Let's quickly move on. Hero Moto is also going to report its Q4 numbers. Where is the top line expected to grow at and where the margins are expected to be at? Let's quickly go to Srishti. She's here with all the expectations.
Well, for Hero MotoCorp, if we look at the volumes in Q4, then there was an uptick of 7% on a YY basis, and sequentially there was a growth of a meager 2%. So that is what will reflect in the numbers on the revenue front. We are expecting a 2.6% quarter-on-quarter growth, with 8,238 crores is what we are expecting on the top line of the company. EBITDA is expected to grow by 9.2%, because do remember the company did take price hikes in the range of 1 to 1.5% in the quarter gone by, and that is what is expected to reflect into the numbers. And the EBITDA is expected to be over 1,000 crore this time around. But the key to note and the key to watch will be the margin figure for the company, which is once again we are expecting to be back above that 12% mark, and that will be after Q3 of FY22. And this time around the expectation is 12.2% versus 11.5%, which the company reported in the last quarter. And lastly, onto the bottom line, for Hero MotoCorp, we are expecting a jump of 7.5% at 762 crores is our expectation. But talking about the net realization, that's expected to be flat on a quarter-on-quarter basis. The RM basket too is expected to be flat. So that is what the number expectation is. But other than that, a lot to be watched about when it comes to the management commentary, especially from the likes of the EV sales outlook, how the recently announcement of the VRS is reflecting into the numbers, and the competition in the 125cc segment. What is the management strategy to fight that one? We'll watch out for all of these.
All right, then thank you so much for that, Shrishti. We will be keeping an eye out on Hero MotoCorp. Moving on then, Bamakshi is here with all the brokerage notes that came in this morning. Bamakshi, tell us, what are the stocks in focus? What are the brokerage notes saying?
Well, absolutely. Let's first start off with Cholamandalam Investment. We have a note that has come in from JP Morgan, and they're highlighting that the margin improvement while maintaining system-leading growth addresses their primary concern. All growth vectors are firing, asset quality looks quite solid, and they believe the premium can sustain in the near term. So given all these factors, JP Morgan has actually upgraded its rating from underweight to overweight, and in fact also hiked its target price from 700 per share to 1020 per share. Apart from that, KEI Industries should also be on our radar. Jefferies believes that the higher revenues that the company reported were offset by lower margins. Order book is up 47% on a year-on-year basis, and in fact is lending visibility to the institutional business. Retail remains on a strong footing, and given all these factors, KEI Industries, Jefferies has maintained a buy rating. In fact, also hiked its target price from 1,915 to 2,305 per share. And lastly, we will be keeping an eye out on Anupam Rasayan. Jefferies believes the fourth quarter was quite weak for the counter. Inventory days reduction were less than guided. However, they expect a gradual ramp up in fluorination LOIs. But nevertheless, they've downgraded the stock given the recent sharp run-up that we've seen. They've in fact downgraded their rating on Anupam Rasayan to underperform from a buy, but nevertheless, they've also hiked their target price from 905 to 965 per share.
Well, thanks for that roundup, Vamakshi. But with that, we're completely out of time on this edition of Market Cafe. From Ankita, myself, and everyone who puts the show together, thanks for watching. The market will take the action forward, so stay tuned.